What up, y'all? It's your boy here at S&P Trading. We got that red day I was talking about that I was telling y'all was coming. We got the S&P down 3% today. Apple is collapsing down 4.5%. Just across the board, everything's red. Literally everything. The Dow Jones is down bad. You got McDonald's. You got the boomer stocks getting squashed today. The Dow is down. What are we down? Oh man, down about 900 points today in the Dow. Nasdaq about 3.5. Oh geez. So just looking across at all the setups, it's looking like next leg down right here. We have broken the significant support on everything. We broke the 280 support, 279 support on Nasdaq that I told you all about. On S&P, told you all about this one here, right at 39.20. I said below that, and I gotta take a little trip down memory lane for my video 2 days ago and show y'all what I meant. Tomorrow, CPI day. If we get good CPI news, which it's probably, honestly, in all likelihood, it's supposed to be good. I would not be surprised if it is good. And we see a big gap up. We gap up to like 40.60 on S&P. We just gap straight up. I predict we will still, not predict, I anticipate that we will still bounce off of the supply zone up here at 40.80. And then we could see more downside. And then we come down here and we go lower. I could see that very easily. I could also see CPI is just terrible, and we just drop straight down to this. We come straight down here, we bounce off the gap, we come up a little bit, retest, and then we go back down anyways, and then we fill the gap, or no. Well, I'll be damned. Look at that. Didn't I tell you all it was gonna exactly what happened? We ran up to 40.80, 40.90, bounced off of that, and now we are collapsing through the support. Fucking told y'all, man. You gotta hit the sub. You gotta hit the bell if you want these daily notifications, man. Free. I give them for free. So S&P going down just like I thought it would, and we are now below the support at 30.90. We are just in free fall right now. We have a big gap to the downside, a monster gap to the downside from 3,800 all the way to 3,750. And now you gotta think, well, what's the market gonna do next? If we've already gotten our good inflation news, we just had FOMC, so we've gotten past all the big events that the market was looking for, and we just could not get past 40.10. So now that all the good news is out, what else are we gonna get that's gonna push us any higher? There's plenty to push it back down. Now the market's looking forward to earnings. It's digesting that info we got yesterday from the FOMC where they said they're going to keep rates at 5% all year next year. And what's that going to cause for earnings, specifically tech earnings? And obviously that's why you see tech falling just so much hard. Like tech is leading the way down. And now the Nasdaq has broken out of this perfect bear flag. I mean, it was just picture perfectly broken out, and it is also in free fall, and it also has a massive gap to the downside, all the way from 270, 274 basically, clear down to about 264. I mean, just a huge gap from that last CPI, or the CPI before last. And now it's clear the market just looking forward, as it always does. We got our really good inflation news. We got the FOMC where they were sort of kind of hawkish, not as hawkish as they have been, but they weren't telling us they were going to cut rates anytime soon. They basically were just like, yeah, we don't think inflation's dead based off just two good CPI reports. We need to see more. We got to see a pattern. And that is why they gave us the old talking to about, hey, you guys shouldn't be riding these stocks all the way up. We're just going to rip that shit back down. Get ready. And they weren't kidding, and we're going down. And if you look at the VIX, same thing. I told y'all about this. And look at that bounce right off that $21. Oh, perfect. So it's the same thing. We're still breaking out of this falling wedge on the VIX, and it is still breaking out of that to the upside. We did have a big yank down after that FOMC meeting and the CPI read, but now VIX is falling off of that support, or bouncing off of it at 21.34. But the real story of the entire market is the 200-day moving average. It held up perfectly still on the S&P. We had two fake out breakouts above this thing. We got that breakout on the 30th of November above the 200-day, immediately went back below it. CPI day, we got a breakout, but we couldn't even close the day below it on like the best imaginable news. And that's why I said if this isn't good enough news to get the market above 10 or to get SPY above 410, then what the hell is it gonna take? And it looks like it held up, and we're still below that trend line. That's the name of the game. That's the entire market. I told you guys you cannot get bullish until we're above this trend line, and it isn't. We haven't gotten above it, and now we are bouncing hard off of it, very hard, super high, selling, bouncing, rejecting off of that, and now it's just as clear as day. We're heading down. We had this key level 390, and we just cut through it like freaking a knife through butter, easy mode. And now it's going down. And I told you all about the 200-day moving average on everything. It was on Microsoft. We were right at that 200-day moving average. Look, it bounced off of it perfectly. I think Nvidia's bouncing off of it. I don't think AMD made its way to it yet, but did Google end up testing? Google's not even close either. I think Nasdaq got close to testing it, but Nasdaq also bouncing right off of its trend line. So it's like if you threw a monkey in a cage, you give him a chart and you give him a pencil, it could draw the fucking trend line that the market is bouncing off of. It's so simple and clear as day. That's why you ignore all the noise. You look at the chart. The chart told us exactly what you need to see, and now it just there's not going to be any good news to save it for a while, and the only news now is the year's about to end, and have things gotten any better? And I think a lot of people are thinking not really, and a lot of people are just selling their shit right now. So tomorrow, where are we at? S&P. We still have a couple more hours in the trading session today, but it looks like the S&P has sort of bottomed here at 388. Next up is that gap to fill to the downside, and unless we gap into it tomorrow, I could see us running down to that gap, bouncing off 386, and we might even get a nice little green day tomorrow. It's been about 3 days of just straight selling, so I'd be expecting a green day tomorrow, but I would not expect a green day to bring us anywhere close to where we were yesterday. I would think a green day maybe we'd bounce up to like 392. I could see us easily retesting that past support. Watch that past support become resistance, like I always talk about, and then we bounce off that and we go back down. On the Nasdaq, same thing. Same thing. Nasdaq, we get a green day tomorrow. We could bounce up to 279. That's about a solid 1% bounce. Reject off of that. Bounce, come down to 273. Go to fill the gap. If you look at Apple, Apple is just a crazy setup to the downside. Apple down 4.5%. I mean, that's the entire story right there. So this is what Apple's been doing, and this is why it's kind of scary this time around. Because previous market rallies, Apple has just gone straight up. Like the one back in August, if you look at the S&P on top of Apple, the S&P went crazy back in August. We ran up to that 200-day moving average. Everything was looking great. We got a higher high. Apple did the exact same thing, and Apple was really leading the market up. I mean, it went straight from 129 all the way up to 176 with no resistance whatsoever, just straight up. But this big rally, Apple hasn't been faring so well. Apple, because of the China news, that's a really big deal, is the China news. They're trying to get that hell out of China. But that's going to be a lot harder than they kind of anticipate. And I think that's why the market is not as high on Apple as they were. But this rally that is now ending, Apple only bounced from 134 up to like 156. So compared to last rally, Apple is way, way lower relatively to the last rally. And it is not looking good. It looks like it's going to make new lows, and it looks like it's going to outpace the market to the downside this time around, as opposed to last time where it was kind of holding the market up a little bit. Now it looks like it's ready to lead it down, and we're finally going to see that capitulation on Apple. That usually, once you see Apple panic selling, that's usually the bottom. And that's kind of what I've been talking about, because all the other tech stocks have done it. Amazon did it. Meta already done it. Microsoft, not so much. Microsoft has actually been doing better than Apple recently, but Tesla doing it right now. Oh my God, Tesla is holy, jeez. Google, same thing. Google, it's close to its bottom, but Apple, it's going to make a big move to the downside, and I can easily see like 115-ish maybe by the end of this year, if not by early next year, on Apple. And Apple is just holding up so well, it's crazy, but not so much now. When you see it's getting like a 4.5% day to the downside, that is a hell of a sell-off. Jesus Christ. I mean, I'm honestly thinking puts on Apple right now. Shit, man, you get like 110 puts. You got to buy some time on these puts. I think next earnings season is going to be rough. I think that's what the market's trying to price in right now. Is that these next earnings? I mean, these last tech earnings we had were bad. So I think higher rates. These rates just keep getting worse and worse. We're starting to feel the effects of them. I think next quarter is just going to be really rough for tech. So that's why we see tech leading the way down. And yeah, this is classic FOMC. I mean, FOMC yesterday was all right. So we had some bad selling, but we only closed the day down like 0.5%. But now it's like we're digesting it fully, and the market is like, oh shit, here we go again. Oh my god, what is Apple doing? Yikes. Yeah, I mean, you just look everywhere. Everywhere looks like a bearish setup. Everywhere is running off of its resistance. I would if I'm holding anything long, unless you're like time horizons like 5 years out, I'd be looking at going hedging myself, get some puts maybe to hedge your long positions because things aren't looking great right now. But SPY has that 50-day moving average too, right on that gap. Look at that. Look at that confluence. 50-day moving average right there on that gap. Sheesh. Ooh wee. It has bounced off that before. So that's another reason I think we'll bounce off that gap before we go to fill it. So watch that. We could close near that tomorrow. Tomorrow we open, we test it, bounce off. That would be a good short position or short opportunity uh, on the S&P. God damn. Headed down 6%. Ugh, it's rough. It's rough. But that's the whole reason you look at the trend lines. You got to just look at the chart. Um, and now we know 410. That's resistance. Last time we rallied up to 430. This time we rallied up to 410, just in our higher low. Got the downtrends. Now it's looking like we're gonna make a measured move down to 330, probably on the S&P. We usually make a move about 12 or 15 points lower than the previous low, and that's kind of where I'm looking at now. So this could be months out, but for right now, it's looking like the end of the year is going to be really bearish. It looks like the Santa rally has already come and go. We got the Thanksgiving rally, but yeah, that's all I'm seeing for today, folks. Not much else to talk about. Everything's looking bearish. Everything's looking shitty. Rates are still going up. Fed hasn't U-turned. Don't fight the Fed. If you're trying to go long here, you are fighting the Fed, and you don't want to do it. They control the whole show. So, thanks for watching, folks. I'll see you later.